at the end of this video, you'll be able to see market structure and why it's so powerful, as well as a trade that I've taken. I'm going to break it down, top-down analysis, daily, 4 hour, 15. Hopefully you learn something, and let's get started. Right now we're on the daily time frame on Euro USD or Euro dollar, whatever you like. Circles are basically my swing ranges, okay? Swing high, swing low, swing high. So at this point, my daily is currently bullish, which means uptrend, right? High, low, high. Simple. If we were looking at a daily bias, my daily bias would be bullish. I'll be looking for buys. Now let's drop down to the 4 hour time frame and see what that's saying. As you can see, the 4 hour is also bullish, okay? This was my high and the high has just been broken. That means there's a break of structure, which means the trend has shifted. As you can see, before it was bearish. Low, low, high, low. At this point it was bearish, but then this high was broken, which means we've switched bullish now. This is a change of trend. So far what have we learned? Daily's bullish and also 4 hours bullish. Time frames are aligned, and more or less when time frames are aligned, taking trades in that same direction is high probability. For example, daily's bullish, 4 hours bullish, M15's bullish. All of them are aligned, same swing structure. Buys make more sense than selling. Think about it, if everything is saying buy, then why would you sell? So again, bullish on the daily, bullish on the 4 hours. So now let's drop down to the M15 and see what that's saying. M15 is basically the 15-minute time frame. M15 is actually bullish as well. So as I said before, all time frames are aligned. All of them are bullish. As you can see, the high is here, the swing high, and the swing low is all the way down here. So we're playing within this massive range between the high and the low. The general rule of thumb is that you should be buying in a discount and selling in a premium. Buying in discounted prices, selling in premium prices. Discounted prices are below the 50% line of the swing range, whereas premium prices are in the upper 50% of the swing range. Did this just glitch out on me? Let's take a look at that in action. So this is a high and this is a low. Now we know our swing range. So 50% would be around this area. So the theory goes, you should be buying under the 50% discounted prices and selling in the upper 50%, so the premium prices. When we were coming into the session, I was actually looking for sells because we've actually broken internal structure. Now this is basically just substructure within the massive swing structure. Always going to be structure within structure. We were coming down bearish, right? Making lower lows and lower highs. However, as session approached, London session, we switched bullish internally. Now this gives me the sign of a continuation. Market is telling me that price wants to carry on up now and it doesn't want to go down. This tells us as well is that this low could be the new potential swing low. If this doesn't make sense to you guys, I'm going to come out with some really good educational market structure videos, so make sure to stay tuned for that. But as we broke this structure, I was looking for buys immediately. Now this was a zone that I drew out. Basically the zone is where I'm going to be trading from, a key area of value from which I can trade from. If things aren't making sense to you guys, make sure to leave it down in the comments below. There's no such thing as stupid questions and I'm happy to answer everything. So now I just set my alerts and then I waited for price to come in, which it did there. So now I drop down to my entry time frame, which is the minute one or 1 minute time frame. I only use this to enter. I wouldn't be analyzing on the 1 minute. Only when I've done all my analysis, top down analysis, daily, 4 hour, M15. Only then, and when I'm happy to trade, then I go down to the M1 and trade. What I saw these equal lows, right? So usually what happens in liquidity is that equal lows, equal highs are usually taken out and then price moves in the opposite direction. So when I saw these equal lows, I was happy that we could come in, go up, and then, we could come in, go up, and carry on up. Remember, buys are high probability. Daily's bullish, 4 hours bullish, and also M15 is bullish. This leg shows that we're actually going up. I mean, I can't say that for certain, but this shows me signs that we're going up. In other words, there's momentum. Buyers are kicking into the market and showing that we want to go up. Price wants to go up. We had the break of structure, which was right there. Now all I have to do is enter, and my entry is actually right here. Don't worry guys, if you want to learn how I'm trading, I'll be coming out with a course which will be really helpful for you guys, so make sure to stay tuned for that as well. Then I was placing my entry, so I had a 4 pip stop, and then my targets are usually just 5R for now, so fixed 5R. And if we had broken this structure as well, I would have removed my order, because after we've broken some structure on the M1, then I don't want it to come down all the way because then it can just plummet down. So the idea behind this now was if we broke this high, if we broke it, I would be out of the trade, I would remove my limit order. However, what my idea was, we could come down like this, get in the trade at this level, and then go up. Then let's just play the trade out. So it came and tagged me in, and kept going, and there. take profit was hit. So basically this is the take profit, this is my stop loss, and the middle is the entry price. So fixed 5R, that was a trade. Hope you got some value out of that. I hope you learned how to do top-down analysis, and I hope me explaining it actually made sense. And even if it doesn't, because for some beginners it wouldn't make any sense, so make sure to comment it down in the, like, any questions, just comment it down. I'm happy to help and answer any questions. I hope you found that interesting and it provided some value that you can use in your own trading. Hope you guys enjoyed the video. Like the video so more people can see the same thing and learn from it. And until the next one, happy trading, guys.